had a couple friends ask me that.
Hi everybody, welcome back to San Francisco. We're here in Moscone South. This is Dreamforce 2025 and we're super excited. This amazing is the operative word here. We're excited to have Robin Washington here. She's the President and Chief Operating Officer and the Chief Financial Officer at Salesforce. Welcome to theCUBE.
Thank you.
Great to have you.
Thanks for being here, being part of the central nucleus here of Dreamforce. We're happy to have you all here on board with us.
Truly our pleasure. I want to start with your title because I love this title. President, Chief Operating Officer, and Financial Officer.
Lots of titles.
But it's very rare. But I would argue, like Mike, that was Mike Scarpelli's job, but he never had the title. Because he was the operational guru and the financial guru. You have both, and the President title. How did that come about? Do you think this is a trend that you're starting? Are you a trendsetter? You dress like one.
Thank you. Well, I actually believe that strategic CFOs are always operational. But having been a CFO for over 16 or 17 years for me, I wasn't as attracted to that. I actually wasn't even planning on taking on another operating role, but it's such an interesting time in the technology space, right, with the AI evolution. I've loved Salesforce forever. Their values are very aligned with mine, and I've worked with Mark and the board in a few different capacities being on the board. So it's right impactful platform, right time, great opportunity to be part of the company at such a pivotal moment.
So you're a long-term board member, and then
yes, since
just
2013.
only like 8 months into this role, right?
Yes, actually 6 months in. First Dreamforce as an operator, very different experience, but I'm loving it. It's been great.
Well, and you know the company very well. So how do you spend your first 100 days, given that you know so much about the company?
Yeah.
So, do you dig deeper? How did you spend your time?
It's a great question. I think what you realize that as much as I know about the company as a board member, I've learned a ton more in the past 6 months, going deeper. I actually kind of approached it as don't assume I know, for the very reason that I've been on a board. But you're right, I have relationships, I know people, so I've been doing a lot of listening. I've been in several of our sites all around the globe. I've met with several different groups, all the different functions, as well as my team. I did a tour with our investors within the first month before my first earnings call, which was very insightful. So it really has been, I call it go slow to go fast. How do you really get up to speed, be intentional of listening to really help set what my key priorities and objectives are.
Must have been an interesting meeting with investors in the first few months because, Salesforce stock has been down this year, but you knew that what was coming with the long-term framework that you guys announced today.
Yeah.
Of course, the stock's up today. It actually held up today in a down market, so congratulations on that. It was up 4% today.
That's great, we're very excited about that. We're very excited to tell our longer-term story and strategy.
And so if we could talk about that a little bit, you upped your target for 2030, I think it was from 58 to 60 billion, and that's without Informatica, that's organic growth,
well, we
right?
hadn't put a long-term target out in several years.
Right.
So we actually, I'm sure there are models out that, but we really see a once in a lifetime opportunity with the Agentic enterprise to really accelerate our customers' adoption of AI, which will fuel our growth and improve our customers' success. And we want to help our customers leveraging technology solve their greatest problems.
And you also indicated that growth would actually accelerate because you've got the existing business, you've got the new business, and anytime you have these transitions, that's a kind of a weird time in the industry.
That's exactly right. We're a software as a service model, and so you sell up front, but you recognize the revenue over time. But ultimately, and we talked a lot about this at earnings day, we're ultimately focused on long-term customer health. So we sell neutron contracts or add-on additional clouds, and then customers renew, so you have attrition associated with that, and your goal is to be sure that that's all positive and up to the right. And we've had a period of measured growth over a few years over the past, so that net new AOV is negative. And what we talked about is we see the inflection point with bookings. They're positive, they're growing significantly in different segments, and so we see our business over time going back to double-digit growth. And so we announced a CAGR of double-digit growth between FY26 and FY30 and believe organically, with all the innovation that we've done over the past several years, that we can get to 60+ billion of revenue. Keep in mind, this is before the Informatica acquisition, which has not closed yet. but when it does close, we feel even more positive about our opportunity to serve
As do
above that
we.
number.
We feel that will expand your TAM even further,
Yes.
take you out of just the sort of space that you're in now and really open up. And there's also a rule of 50 here, and it's confusing sometimes what people mean by rule of 50, sometimes it's cash flow, sometimes it's margin. What do you guys mean by rule of 50?
So we call it 50 by FY30, and it's a combination of our service and support revenue percentage and our non-GAAP operating margin percentage. So that's you're right, it's different, that is our definition. So we want our sales growth to grow, and then we want our profit, we want to be more profitable. So we want our non-GAAP operating margin to grow as well.
Well, super exciting, and Street obviously saw it as a buying opportunity.
Yeah.
So you had talked about, you referenced the Agentic Enterprise, and you're in this unique position where you're head of operations and head of finance. And you can shed unique perspective on what does an Agentic Enterprise mean to someone in your role.
It's great.
That would be
a great question.
Our audience would love to hear that.
Absolutely. So if I think about my 3 priorities and how that fits in, one obviously is to ensure adoption of AI for our customers and success, but the other 2 are operational excellence and responsible capital allocation. So to your point, the more we identify ourselves, we can serve as an example. We call ourselves customer zero, but we can serve as an example to our customers of what it means to be agentic. We can also be more productive. So I'm looking at for ways, we want to make investments. We've invested in our research and development. We're doubling down on growing our AE capacity to ensure that we are available to customers as needed. So how do I do that? By reallocating resources. I do that by agentifying my enterprise. So we've got a ton of agents. We've honed in on like the top 40, but we're really focused at the ability for us to digitize our workforce and labor. Not that it replaces humans, but it enhances our people's ability.
We were talking earlier that you can sort of leverage the human expertise better.
Absolutely.
So maybe less low-end entry-level support and maybe more on the AE side, so.
Yeah, there's a rebalancing. I would say our people are our greatest asset. But to your point, with growth that we've talked about, do I want to add a bunch of additional people or can I reallocate it? Or to your point, as I leverage agents to help with customer support, maybe I move people from reactive support to proactive support. We've got a new role called forward deployed engineers, which is all about helping our customers get their agents going, get that consumption flywheel going, and help them achieve value. So our ability to reallocate resources, rebalance, and put people in the right place without necessarily having to hire, but it will change the shape of our organization, as will agents or any type of productivity tools over
One of the
time.
keynote speakers was a forward deployed engineer. I hadn't seen that title before. That's interesting.
Yes.
And the other thing, I'm going to make you laugh, so I was with Michael Dell this week, and I didn't want to tell him that I was leaving his event to come to Dreamforce.
No, he was here.
I know, I didn't want to insult him, and then I saw he was here, and I saw that, this interview with Mark, which was epic. And then, what was interesting to me is they went after, and I've been talking to Michael for a while about how intense they are about leading in this era. And they went after the big kahuna with the supply chain. That's a big NPV swallow, right?
I actually got a chance to talk with their CFO and their Chief Transformation Officer. Like you said, they are maniacal about taking out costs and accelerating growth, right? And you're right, they went out, they looked at supply chain, they've leveraged a company now part of Salesforce, right, that can really think about automating very disparate processes. Not necessarily replacing systems, but just taking processes that are manual on paper, or it's exchange of emails between customers and everything. And I got to actually talk about the experimentation they were doing. I shouldn't call it experimentation. It is embedded in their supply chain. It's been amazing.
So, but what's interesting about that is they went after the big NPV. We see companies, a lot of customers are hitting singles, I call it, going after sort of low risk, and that's fine, but I'd love to get the CFO's perspective on that. When people come to you and say, okay, we got this big idea, we think big, and we're going after that maybe it's not even a smaller ROI, but it's a big NPV, and maybe the break-even's not as fast as you like. How do you think about it as a CFO, especially in the context of this AI opportunity?
Yeah, it's interesting. I mean, I think some of the biggest deterrents to adoption is not understanding, is this really going to add value? And to your point, what does this mean for me? So, being sure that agents can be trusted, there's always the risk of, do I want it in front of my customer or whatever, but the goal is that we talk about forward deployed engineers. How do we ensure that we're equipping customers to move fast, to get through that experimentation process easier? When I think about it for Salesforce or Customer Zero, I want to take things that maybe we weren't doing. So our SDR, for instance, there were leads that we weren't calling back.
Right.
And now we're having email exchanges, and we're booking revenue, we're setting up appointments, we're engaging our sales organization. But there are other areas like procurement where if I can leverage these agents for a better employee experience and how they get things done and I'm freeing up their productivity, it's the way to get beyond maybe some of these concerns or consternation around what did this mean. So I think you have to have a mix of things that can make a difference that a lot of people can experience, but also do it in a way that you're optimizing growth, but you're not necessarily putting the trust of your customer at risk.
And on the SDR example, just to put a finer point on that, if I recall from the keynote, it was like 50% of the inbounds, and I think was the number, might have been higher or lower, weren't being followed up, and now they are. It's like 99% being followed up, and so I presume that the AI is helping you prioritize those.
Yeah, and
these
are inbounds, not necessarily for our large relationship sellers, but these may be some other inbound SDR that we're kind of doing with online selling.
Right.
But yeah, it's given us the ability to have someone, an agent, around the clock, interfacing, following up, providing answers, maybe better than humans who are busy doing a lot of other things and prioritizing, but now each one of those leads is followed up
And
on.
even if it's a single digit that turns into revenue.
It's incremental,
Yeah, it's
things
totally
that you wouldn't have
right,
done,
right?
So, yeah.
So I have a question that comes from a slightly different angle. In dating me, we were going back, we were talking earlier about the PeopleSoft, SAP era.
Yeah.
But I remember back in the mid-90s when there was this furious land grab among the major enterprise application vendors. And what happened was SAP, because their pieces worked together so well, started pushing out tactical implementations that whether they were homegrown or packaged. And so for 10 plus years, they grew with, I think, a metric that probably be close to your heart, I think net retention, revenue. They didn't have it back then, but something you would have now.
Right.
And to me, the more I understand Agentforce and Data 360 and the apps, the more it looks like you have something so deeply integrated that it's so much more valuable than the sum of the parts, and that we're going to start seeing you spread within accounts that already have, partial implementations.
It's a great insight and way to think about our business. You're right, we see the greatest value in about 85% of our ARR comes from customers that today, pre-Agentic, are 4 clouds plus. So there is rich data about our customers and insights, or our customers' customers and insights as to how they manage their business that sits in our core clouds. As you add Agentforce 360, that accelerates those insights. And that deeply integrated data, adding those agents grounded with fact, we call it determinism, and the ability to really understand, that is different than going out and taking some other agent and whatever. But you're right, it gives us the ability, you call it land and expand, it gives us stickiness, it gives us improved ARR, improved engagement. If you add on to that our data, our analytics and our other products, what we've seen is as people start to try Data 360 or Agentforce 360, what we're seeing is a 1.2x ARR increase in terms of their experiment.
Over what time period?
Well, we've started to see this already as they move to start to try it. What we believe over time, and this is what we talked about at Investor Day, that if we can truly make customers end-to-end agentic on Agentforce, that it will expand their usage of all of our clouds. It will improve their performance, and it could be 3 to 4x increase in ARR for those customers. That's our our belief.
Okay.
Everyone's not
That's
there.
concrete.
We're still early in the journey.
Yeah.
But as we think about our ability to organically grow our business,
Yeah.
10% CAGR between now and FY30, it is really driven by the continued adoption of Data 360 and Agentforce, in addition to our core platform.
I want to ask you about M&A, and I'm curious if you got questions from the analysts on this. I mean, you've seen the acquisitions that Salesforce has done, and as the company transitions from what I would think is more of a product, SaaS module company, different pieces, Slack, Tableau, et cetera, MuleSoft, to a platform company. Does that change the way you think about M&A?
It's a great question. I mean, I think we've always consciously looked at opportunities that improve our core products or give us adjacencies that make sense that our customers are asking for. I would say Informatica in particular is one that gives us more ability to reduce data complexity for our customers.
Right.
So to your point, that's part of our platform. That was one of those type of transactions. I don't know if it changes. I think we're always ideating on what do we need to ensure that we really, to your point, can be the full customer experience. But and we're doing our own organic innovation in that way. ITSM is a product where we're taking our products and we built it in-house. So whether it's organic or inorganic, we're looking at ways to expand our platform so our customers can take advantage of that rich data that's currently exists in our systems and use it in a ton of different ways to solve their most difficult problems.
The reason I asked that question is as a platform company, as you bring in new companies, you want them to integrate with that platform. It's not just buying for growth, it's buying for that, that flywheel of the integration. And so it seems like you either have to do that integration yourself or it's a more facile integration. Like for instance, take a smaller company like CrowdStrike, they're on their way to 5 billion, you're on your way to 60, but they're very dogmatic about we won't acquire a company unless they have sort of done the early work to plug into the platform. But it sounds like you're not as dogmatic about that, it's more the potential shareholder and business value for customers.
Absolutely.
And you'll actually do the heavy engineering lift if you have to.
We will, and I think also one of the things that Salesforce has been known for always is basically a flywheel for the partner ecosystem. So our partners, we partner with all of the large multi-scalers, we understand that our customers may have different user interfaces. We love Slack, but everybody's not Slack first. They should be. So, but it doesn't mean that we can't interconnect with them in different ways, with Teams or what have you. So for us, it's important, as you said, focus on the customer and their needs, and that kind of drives how we think about the products, inorganic or organic, that we need.
This interview has flown by so fast, we're already out of time, and I'm sorry for that. I'd love to have you back and maybe have you at our NYSE studio. What's your highlight of Dreamforce this year?
My highlight for Dreamforce is really seeing people conceptualize and understand and buy into the agentic enterprise. I think we're just at the beginning stages of it, but it's pretty phenomenal. Record attendance, I think it's our best Dreamforce ever, and I'm so happy to be here in this role.
Rob Washington, thanks so much for coming to theCUBE, really appreciate it. All right, this is Dave Vellante for George Gilbert. We're here at Dreamforce 2025. We'll be right back from San Francisco right after this short break.